Welcome back to another technical analysis training video. In our last couple of videos we looked at price behavior and how price behaves when it downtrends and when price uptrends. The behavior being this step in motion, a series of highs and lows like so, on an uptrend just the same. And we also looked at range in markets. When price moves in a sideways direction, we generally get something that looks like this. Price moving between two areas in the market and moving in a sideways direction. So in this video we're going to look at the characteristics of an end of a trend. What happens when a downtrend comes to an end, and when an uptrend comes to an end, and also when a range comes to an end. In front of me I have the same historical price data I've used in the other videos. This is the pound against the dollar being May, June and July of this year. It's a 4-hourly chart. If we start off in May, we have a downtrend, we have a push, a pullback, a push, a pullback, a push, a pullback, a push, a pullback, and another push before this thing changes direction. The characteristic of a downtrend is lower lows and lower highs. The characteristics of an uptrend is higher highs and higher lows. So let's look at this downtrend. We have a high and a low. We then have a lower high, a lower low, a lower high, a lower low, a lower high, and a lower low. This is the characteristic of a downtrend. When this characteristic is no longer evident, that's your signal that the downtrend could be over. Now, what I mean by no longer evident, if one of these highs or lows are broken, if we were to make a higher high, for example, or a higher low. And let's explain this in further detail. So here's our downtrend. These are the highs and lows. High and low. Price pulls back, creates a lower high compared to this high previous. Comes back down but does not create a lower low. Here's our low previous. And here's our new low. So it doesn't create a lower low, and it then pulls back and breaks this high. Now that's our signal that this downtrend could be over, and it is. You'll then notice after we have a higher low and break this high, price uptrends. We start to get higher lows and higher highs, which is the characteristic of an uptrend. Higher high, higher low. So let's look and see what happens to this uptrend. So price comes up, a series of pushes and pullbacks, and then the uptrend comes to an end and goes for another downtrend. Here are our higher highs and higher lows. If we look at the price action in mid-June, around this area, we have a push, a pullback. We've made a higher high and a higher low, which is the characteristic of an uptrend. We've made another higher high and higher low. Pricing goes for a push, creates a higher high. So the uptrend is still looking good, it's still looking healthy. But when we go for the pullback, we actually make a lower low, not a higher low, which we would expect on an uptrend. This could be a signal that this uptrend has come to an end. We then go for a push, make a lower high, and price downtrends. And we have a series of lower lows and lower highs which gives us a downtrend. Let's look at this downtrend in June, July. Price is downtrending. A series of lower lows and lower highs. Here's our high and our low. Price pushes, makes a lower low, pulls back, makes a lower high. Price pushes, makes a lower low, so things are looking very healthy. But when we pull back, we create a higher high, and that's a characteristic of an uptrend. And then we go on an uptrend, and then we go on an uptrend. So let's look at ranging markets, and when ranging markets come to an end. If we go to the range we used in our last video, which was here, here's our resistance area, and here's our support area, and price is moving between these areas like so. Eventually a range comes to an end, and how does that happen? Well, price closes above or below the support and resistance areas. It breaks through, and we call that a breakout. You'll notice that if we move our chart forward a bit, this range does come to an end, and we have our breakout. Here's our resistance area. Price came up, it looked like it could have gone back down to the support area, but went for another push. We had a big candle close above this resistance area, and price is no longer in this range between this area and this area of the market. So why is it important to know price behaves this way? Well, first of all, we make profit by speculating where future price is going to be. If we can identify an uptrend or a downtrend and trade with that trend, so when price is downtrending we go short, when price is uptrending we go long, obviously there's more chance that we're going to make a profit. As well as when price ranges, we can speculate where future price is going to be if we can identify a range. But also, it helps us to know when to close positions. If we were on a downtrend and we had gone short and we're making money as price depreciated, identifying the signals of when a downtrend could be over will help you to know when to close a position and to perhaps reverse a position and go long. The same with this uptrend. If we went long because price was uptrending, knowing that we've created a lower low and this trend could possibly be over, could be our signal to close this position. And with a ranging market, if price has broken the resistance or support, we now know to no longer use the support and resistance lines as areas to open and close positions. Thank you so much for watching.